Ladies and gentlemen, let's make way for our next conversation. And trust me, it's going to be a great one. As we spoke, the topic being evolution of the India digital payments. From a fledgling to being the global leader, let's understand the journey better with our eminent panelists joining us. Moderating this session is going to be Mr. Srinivasu MN, co-founder and director of BillDesk, along with his eminent speakers, Shri Gunveer Singh, Chief General Manager in charge, Department of Payment and Settlement Systems, Reserve Bank of India, Ms. Deeksha Kaushal, Director Partnerships, Google Pay, Google, Mr. Vikas Bansal, Chief Executive Officer, Amazon Pay India, and Mr. Amarjit Singh Walia, Head Consumer and Commercial Cards, ICICI Bank. Let the applause continue as we invite our dignitaries now on stage. Making way to the day 2 of the 5th edition, ladies and gentlemen, of the Global Fintech Fest.
Good afternoon. Welcome, everyone. As was just announced, this is usually one of the most eagerly awaited sessions at GFF, primarily because we get the privilege of hosting the CGM in charge of payments at RBI. And we get the even further unique privilege of being able to ask him questions. So it's not a session to be missed. Quickly getting to the topic. Digital payments has been one of the core sessions at GFF. This is the 5th year. And this is an anchor session where we get to trace the journey of digital payments and what has happened over the years. In the earlier sessions of GFF in the previous years, the topics have ranged around innovation in payments to the role being played by fintech players, to the uniqueness of India and the need to customize things for India. A lot of discussion around, as many of you will remember, the construct of the jam trinity. So we've come a long way from there, as you can all see. The defining moment has been the fact of we moved from being, as a country, that's perhaps had a limited presence on the global stage in terms of digital payments to now arguably being the single largest player with a near 50% share of the payments that happen worldwide and retail payments that happen digitally. So the panel here you see are a set of people who witnessed this journey over the last 4-5 years in specific, and we'll focus a bit on that. Over the years, this growth of India in terms of digital payments, the evolution, generally from what you would see or read in the media, a lot of that success gets ascribed to fintech players, new products, the digital focus and the digital agenda of the country. What perhaps doesn't get enough attention, or if I may take the liberty of saying the proportionate due, is the role RBI as a regulator has played in enabling this in terms of setting the framework, the policies, and just ensuring an orderly growth to where it happens. So I'll start with that as the cue and start with Mr. Gunveer Singh asking this question. Sir, from your perspective, broadly from what you've seen happen for 5 years and in managing this growth, what's your perspective on how this has grown and how have policies that have been framed by your department and RBI enabled this kind of a stupendous growth?
Yeah, so the growth in digital payments, that is for everyone to see. Everyone is aware as to, how much growth it has seen. It is, we are proudly, showcasing it to the world, the kind of growth the digital payments have seen, okay? And, as you're saying that the credit of that should rest something with the RBI also, and I would be, I would gladly take that compliment. You see, we as a regulator, we work on the trust business. I think last year also I was here and I, mentioned the same thing, that we are in the business of, making whatever systems are there trustworthy for the customer. So it's a customer-centric approach that we call, and the whole idea is that it should be trusted by the customers. But having said that, it's not that that's the only approach, that the trust is the only thing, and the safety is the only thing. The innovations also have to be factored into, the growth has to be factored into. So it's the balance that you strive at. Yeah. And now for that, RBI over a period of time has changed its role. It started with as an operator, then it got a regulator, then it got facilitator, and now we look at ourselves as catalysts also. And the way we have over a period of time become so much consultative. Initially, when I joined the bank, there was not so much of interaction happening with the industry, with the ecosystem. And now slowly and gradually it changed. And now it's not only that we, interact with the industry, but, we proactively interact. We kind of seek out whatever, feedback we want to have, whatever, inputs, whatever views we want to have. And we started even before we come up with the regulations. So the idea that whether we need the regulations or not, if yes, then what kind of regulations? And then once we create some draft regulations, we again put it up for public consultation. So the kind of consultative approach that we have got, I think that goes a long way into reaching a balance with the industry that actually supports the industry. So we are able to take a decision which works in the best interest of the industry and for the country as a whole. So I think that, and the fact that we keep trust in the center of it, it helps people, it helps in the adoption of that. So that's how I look at it.
No, I think it's a testimony to, I think, RBI's, let's say, proactive role. I don't think in any other country, in any event like this, the central bank would have its own presence in terms of the exhibition area to be able to allow interaction of participants and attendees to come even ask questions. I think usually it's difficult to get entry into the central bank building in any other country, but I think India and RBI have been an exception. And we've all been beneficiaries of that, so thank you for that. I'll take from there to ask Deeksha. You've been a banker in your earlier avatar before you kind of donned a mantle here at Google Pay. And you've seen this journey, not just for the last 5 years, but even earlier. Maybe you could talk about from a Google Pay's experience to even industry perspective on the role you think that the policies of the regulator have helped the marketplace grow and for India to get to where it is.
So, you asked me to wear the banker hat and the fintech hat. I think I'll start the answer though with the consumer hat, because I think Google Pay consumer is really at the heart of what we do. And therefore, I want to share my own consumer story. I was visiting outside of India a few days back, and the city that I stayed in for a few days has a per capita GDP of $63,000. India's is at $2,600. But when I looked at the payment experience, for me as a consumer, there were 3 issues. The first one was the number of methods available. There was cards and there was cash. So there were only 2. The second one was security, because most of it was tap and pay. And if you're in a new country and you don't know the merchants and it's a new place, one is wondering that what bills are we running up? And then the third one was, and of course on cash as well, we were warned that, be careful with your purses, etc. And then the third one was in terms of costing, because including FX and transaction costs, it was approximately 3%. If you look at your own experience in India, and I look at mine as a consumer, if I'm out for a meal with friends, or I'm shopping, or like even buying something on the internet, we're so certain that we'll have secure, affordable, convenient, multiple ways of payments. So I think that to me is, as a consumer, testimony to the impact that RBI has had in my life. To the banker hat, and the banker and me can't go without numbers, Vasu. Numbers share a similar story. I think we all know that digital payments in the country have grown 9x from 2017-18 to 23-24. We're looking at almost $186 billion transactions in the country, growing at a CAGR of 44%. You already spoke about the fact that digital payments in India today are 46% of the global payments. That is more than the next 4 leading countries combined. Of course, UPI has been a big part of that journey, and I think GPay has been part of that journey as well. It's our fortune to do that. UPI accounts for 80% of retail payments, and in fact, India has more than 43 other countries combined on UPI. It's got to do with our population. It's also got to do with policies that enable population scale platforms and technology. So I think when I come to the role as a market participant and where RBI's policies have really helped us think progressively and act as a catalyst, as Sir said, the first one is interoperability. RBI is focused to create an interoperable ecosystem where all of the market participants can collaborate. UPI is a great example. Anyone can send money to anyone. We as a app have nearly 2/3 of our payments going to other apps in the ecosystem. The second one is integrity, where, as Sir said, the consultative sessions that happen between various players, whether it is on cyber resilience, payment security controls, they help us think forward in terms of how can we build trust and safety for the ecosystem. There's inclusion. So campaigns like Har Payment Digital, Digital Payment Awareness Week, the Village Adoption Program help us think in terms of how can we take payments to beyond the 400 million consumers that we serve today and get more inclusion into this fold. And then the last one, of course, is innovation. And I think a great example of that was yesterday, where on the stage, UPI Circle got announced, which was co-creation under the policies of RBI, where we hope that, we can now enable consumers beyond the first set of 350, 400 million who are already using UPI. So I would say that, when we look at it as a market participant, it is the proactiveness, it is having ability to innovate within guardrails, and a focus on good governance that really stands out.
The one insight I take away from your talk on it is your transition from a banker to a non-banker is complete. No banker sitting there would have said a 3% markup on a card transaction, right? So I'll segue from that to Amarjit. You're a banker, been a career banker, and you've seen how policy is shaped up. Payments was always a banking business in the domain of the banks. It was the banking industry's game to win or lose or capitalize, whichever way you want to see it. So how have you seen this transition happen from a bank's perspective and a banking industry, not just specific to your bank perhaps? How have you seen this transition happen? How do you think the payment-led policies have played out for the banking industry?
Thank you, Vasu, and good afternoon to all. So clearly, when the policies come, it doesn't feel like the policy has been thrusted upon you. What Gunveer sir was mentioning. I think the whole consultative approach, in a way, makes you a part of that policy, right? First of all, so anything that is happening today is so customer-centric that you're aware that it's allowing you the stretch to think, to create a good UI, good UX, but at the same time, think the safety, think the security, and understand that customers are not shortchanged. And, I honestly feel that it is not for a bank, kind of a bank versus non-bank play or no play. In a way, banks have been always playing along with the non-bank players, right? Ever since, the 2000, I would say 7 or so, when the act came about, and after that, we saw large non-banking players also come into it. Today, even if you look at UPI or any other instrument that the customer uses, to pay, banks are available. Banks are providing the rails. Banks are participating. Banks are there to ensure that, whether it is the transaction that has to take place, or the safety security, or the fraud prevention rules, chargeback, everything, bank plays a role in it. So we as a bank, we've been both facilitator, at the same time, as a processor, and at the same time, we have an app, through UPI. So whether it is UPI, and now, of course, on credit cards UPI, which is seeing a very, very good pickup for us, or any other form, whether it is credit card, debit card, CBDC, we want to give that play to our customers to choose whichever instrument they want to pay with. And at the same time, as a bank, we will work closely with non-banking partners to make it happen.
I think that's the right answer. Vikas, I think let me come to you. Of course, Amazon as a group, as a business is obviously well known, but you've seen this complete transition as a group. Before I come to your specific kind of focus on payments, right? From being an entity that needed digital payments for its core business to now being a participant in payments business. It's usually a, a difficult journey, for a multinational in a new geography. But I would say both for Google and for Amazon, the journeys have been fairly smooth, fairly easily transitioned in a very enabling policy framework. In this context, from your perspective, right? How do you think the framework in India has helped the payments business for Amazon to build up? Secondly, just kind of to take it forward from there, uh, large number of players. So how do you think of innovation and products in helping the payments business?
Sure. Thank you. Good afternoon. Really honored to be here. So from Amazon Pay perspective, first of all, our mission continues to be that how do we make payments trusted, convenient, and rewarding for customers as well as for merchants. So in this regard, we've been on this journey, as you said, for more than 8+ years. And we were born to solve the problems that we saw, large problems in the marketplace, Amazon marketplace. I remember the days when almost 1 in 3 payments used to fail. The cash share was extremely high and all of it. And then the access, customers didn't have access to kind of credit or installments and other things. To fast forward, it has been a phenomenal ride. And to a point then now it's like less than 1 in 10 payments fail. It's been massive shift to now having a large set of installment options, credit options for customers. To the cash share has almost flipped in terms of the share, right? And what is, to your question, what has been the core of it is really 2-3 things. One is what we call digital public infrastructure. So the kind of enablement with Aadhaar as a center and then the Trinity, which we call that one as a one dimension, building upon that, the UPI, building upon that what we've been able to do through now with ULI and account aggregator framework, to what we are now innovating around the new ways of innovation on CBDC and other things, and solving real problems now in cross-border. So what has been the center of all of our innovation is the digital public infrastructure. That's one. Secondly, also to have a proactive and progressive regulator that we have, and the government policies in that direction that we have, which you mentioned, Vasu, like lot of other countries don't have that, which also becomes an enabler, because otherwise it instead of acting as a barrier, it's also an enabler, which has really helped. And also the other thing is, what we've also seen is in terms of consumer dynamics, that unlike a lot of other countries, India is vibrant, right? The kind of the youth, what we call the Indian youth, or it's the large 300 to 400 million segment who's already on mobile and who's already very keen or inclined to adopt digital payments compared to some of the European countries or even Western countries where it's a little bit older demographic. So I think it's the digital public infrastructure, it is the policies and the regulator, and also the consumer demographics, which has really helped us as well as the industry to really go forward and to get to this. But as you said, we are still less than 50%, and there are countries which are 90% plus digital payments penetration. So we still have a long way to go. So some of the things that we are talking about and we are launching in this GFF are going to be the enablers for next 10, 20 years to come. In terms of how we look at it, our philosophy has always been work backwards from the customer. We find a customer or a merchant pain point and see how we can use, to solve that customer problem. And then provide differentiated offerings and differentiated customers. Even when we look at 10 years from today, customer will not say that, okay, give me slower payments And, or merchants will say, okay, increase my cost of payment, right? Or they will say, look, make it less secure. They will always want more faster payments, more secure payments, and at the lowest cost. So if we feel we fundamentally can use DPI and our own strengths in technology and ML to solve those problems and solve those problems at scale, that's how we will differentiate. There's no secret sauce. And then the players who are able to differentiate and provide that value are the players who will see the adoption, of products and services. So I personally feel very excited, with what we have in store and what the next 10 years, we will see much bigger transformation that we've seen in the last 10 years. So it's been very exciting.
So Amarjit, I'm going to come to you. Vikas is very excited about the business as a non-bank he can build. So tell me, in that kind of an environment, how do you think banks compete? Or because there is a way a non-bank will want to play the game. They have certain assets, they don't have certain assets. As a bank, you have a different set of assets. From purely a competitive landscape perspective, I know you mentioned collaborative approaches, but there's also an angle of competition in the marketplace because it's a commercial, everybody is a commercial entity. How do you see the competitive dynamics playing out?
Honestly, Basu, I don't see this competitive. If you ask me, I'm seeing this that we're a very, very large country. And as you heard, from Vikas say that we've not even scraped the surface here, right? The use cases are so very many. And there are very, very different stacks that one gets excited about. I mean, let's look at the ecosystems like, for example, healthcare. There's a lot of things to solve. Let's look at education tech. Lot to solve. So I think as a bank, we would like to, instead of calling them or ourselves into any kind of competition, of course, we are here in this business to make money for our shareholders. But at the end of it, I think we have a long way to go in this collaborative spirit where forward, backward integrations are possible. There are certain things that we can make available and seek from them. There is an agility on the tech platforms that non-banks bring about, and we are happy to be a part of that as well. So I honestly don't see this as a competitive space, more of a collaborative space.
So, sir, I'm going to come to you, taking from what Amarjit and Vikas have said. Over the years, the role non-banks have played has kind of graduated from being an intermediary working in a certain format with what are called merchants or customers or banks, from there to being partially technology providers to product providers, to getting to a scale where from a regulatory perspective, it was felt necessary or expedient to kind of license them for activities. That approach has been driven by how market has evolved, product-wise to maybe an activity-wise. So constructionally, a number of licenses have been issued, and if I can take the liberty of pointing out, Mr. Gunveer Singh possibly has currently the record of the maximum number of licenses issued by any regulator in a 12-month period. So we'll say he may break his own record in the next 12-month course, or maybe somebody else in RBI. I hope you don't mind my saying this, but there are large number of players, large number of licenses, different activity-wise. From a regulatory perspective, how do you see this playing out what's the best umbrella to govern this kind of place? Do you see a possible unification, extension? Just your thoughts on this.
So, I have had the privilege of signing the maximum number of, authorization certificates. Doesn't mean, it is my doing. The work started much long ago. It was in the process. Most of the work had been done. It is just that I came and, it was like, ripe for it. And maybe, we made that process is a little more efficient, and that's how, you see the number. But yeah, I take the compliment for that. But right now we have a large number of, entities which are, like there are 42, PPIs, non-banks, and then you have some 35, PAs, online, and then, I think 3 or 4 we shoot for the cross-border also. And then there are, a lot of them which are there in the queue, and I'm sure there are, people waiting, and they pursue with me that, okay, these are pending and these need to be done. And I assure them that, we are doing it, as efficiently as we can with our resources, and, those will be issued. Regarding whether, these entities are enough, whether, we need to look at it, whether, there is a need to expand the number depending on the market requirements, market response. So it's like, I don't have the capacity to look into the future as to how it is going to evolve. So the market is going to evolve. We are going to watch, okay, as to what use cases the market is bringing. So it's very difficult to answer whether, the regulator is looking at stopping at some point of time or not. So, it will all depend on how the market evolves, what are the responses, what views are formed at that point of time. So right now it's all fluid and evolving. And I see a lot of use cases and I see a lot of value being created. And there is a lot of opportunity for the ecosystem, and the new players can come about. So I don't see any concern on that.
Yeah. So many of these licenses are on tap. So in general, for players to be applying, and therefore, as you said, there's potential a larger number of newer players who may wish to apply. I mean, anecdotally, let me narrate this. Many years ago, there was a particular license that the regulator had put out, and this was at a time when, in general, there was a certain environment which is many years ago, and one of the founders, and I don't know if he's in the room here, had applied for that license. And I remember when asking him as to why did he apply for the license, where does it fit into his business, the anecdotally, this is what he mentioned. He said he's grown up in an environment where you see a cinema ticket counter open, you kind of go grab the ticket because without knowing what the movie is going to be like, because you don't know when the window will shut. Of course, that risk has now been taken away with most licenses being on tap, so to speak, and people's ability to apply. So I'm going to use that plank, Deeksha, to come to you, unless, sir, you wanted to add something.
So I'm saying that, don't take my comment as if that option is off the table.
Okay. So there you heard it. All of you can interpret it whichever way it suits you. But while I'm going to ask Vikas this later, you're sitting on a host of licenses to do all kinds of business. That's a smart move. But Deeksha, coming back to you and from a Google's perspective, I mean, Google globally as an entity is regulated under different kinds of regulation, maybe data, privacy, technology, whichever. But never for a business as operationally regulated as payments is in a financial services sector. You are now a regulated player with licenses. Just tell us, what does it mean for a global or a multinational player like you? What does it mean to be regulated? How do you deal with the challenges? Anything interesting, any anecdotally? I'm sure it has its own team building, HR challenges, or whatever. Not challenges, I'm saying new, let's say, frontiers to address. How does it play? How does this work out for Google?
So, actually, I'll take a step back and I'm going to combine this with two things. One is, of course, in terms of how does it feel like to be regulated directly by the regulator. And equally in terms of how do we think of Google Pay in the context of Google's overall mission as well. And I'm sure you all know, when you look at the search bar, our mission as a company is to make information widely accessible and universally useful for everyone. And when we think of Google Pay, it's to make money simple. And how can we help with organization and accessibility in Google Pay is something that we strive to do every day. And in that context, when we're looking at accessibility, for an example, 2/3 of our transactions happen in tier 2 cities and beyond. We serve almost, 4/5 of our merchants in tier 2 cities and beyond. As we look at that sort of length and breadth in the country, to your point, Vasu, what happens is that payments, of course, becomes very, very operational in nature, and also it's very diverse. And in that context, when we think in terms of the enabling regulations that are there, while of course regulations can vary based on various sectors, various geographies, what's the nature of the business, what's a combination of technology and operational intensity, we think fundamentally there are a lot more similarities. The focus on customers, the focus in terms of maintaining trust, privacy, safety, the focus in terms of how can we get more awareness. And we feel, in fact, that a lot of the regulations enable us, they help us in terms of thinking through when we serve operationally, we all know payments is an operational business going back to my banker days, across so many cities and towns. And I think anecdotally, in fact, I have a different answer to give, which is that, since you brought that out earlier, I thought moving from a bank to a fintech, I would, be looking at life where we would have innovation and, we would have a ecosystem where we would look at new features and we would meet the regulator. And I think I meet the regulator as much in my fintech hat. So, really grateful for that as I did in my banker hat. So I think it's good to see that all of us are following that same level of compliance.
Yeah. I assume from a regulator's perspective, not to take away that if they see a lot of bankers moving to non-bank, they have to wonder why, right? And therefore, there's a need to regulation. So maybe moves by bankers into non-bank causes higher regulation. But Vikas, taking from the same point which Deeksha articulated, right? As we briefly talked about, you have multiple licenses within the payment space. So for you, is there an ideal way forward from here in terms of if technically, let's say, you could have ask of a regulator or at least table a recommendation on how you think this regime could evolve? Do you have any thoughts on that?
Yeah, so first of all, I think we were not in the business of acquiring licenses. It just happened to be the outcome. And really going back to my earlier point that the idea was how do we solve real problems, for our customers and merchants. And if that solving that problem requires us to get a license, that's what we've done and kind of acquired all the necessary licenses. And as you said, because India, the payment ecosystem is so large and so diverse, so you got to sort of look at it in multiple dimensions and solve different problems. Now, if you think about going from here, I think for Sir, in general is about the licenses have kind of come around and how do we think about, can we simplify or unify some of the licensing regime so that one license can enable you, because the requirements, the standards, and some of those guidelines are kind of similar in certain ways and different in certain ways. So if there can be a unified framework in which the participants can participate, and then you also have proportionate, progressive requirements for certain activities, so that way it can become more inclusive and progressive as we think about it. And I already think that there is some work that has already been done in that case, right? For example, earlier BBPS, right, you required a separate license, but now if you're a payment aggregator, you can actually are free to do BBPS activities as part of it. And thank you for kind of enabling that. And similarly, I heard this whole idea, because we used to have PAO, and with the PAP framework, as separate license, instead of that, can we look at it a unified way? And there's already a lot of thought that has already gone in from the regulator in that side. I think similarly, as we think about, because more and more things will start to get regulated, because regulation also comes with systemic risks and to ensure consumer protection. And as we grow, right, how we've done in payments is, and we will see other products, financial products and services, is that can we think about a simplified, unifying framework with progressive requirements for certain activities? I think that will be a big enabler as we think about next decade.
So you want, yeah.
So presently, the law doesn't really allow me to do that. For the law allows me a regulation of a payment system. It doesn't allow me the regulation of an entity. So we will, have to get the law changed for that. But short of that, as you mentioned, we have already started working on simplifying as how easily we can process, once an entity is already regulated, then the second activity, if they are doing, can we do it in a, lesser, formal way? Can we simplify it? And that's what we have started. And we are also working on, as how soon can we get into, changing the legal provisions, if that is what, makes sense. We have yet to, max out.
No, if I can add that as a participant, I think there's been phenomenal progress there. One is, as you mentioned, and even to the point Vikas made, I think one part of de facto unification is achieved by making almost most requirements common, whether in terms of tech standards or audit standards. So in some sense, that whenever that is feasible, an amalgamation of the licenses into one, it just becomes procedural. What I've also seen over the period is some kind of the framework policy license requirement in the last couple of years have become more anticipatory and proactive, if I can. Whereas, let's say, because the digital payments evolved to a level where it's perhaps easy for a regulator to say, take a 1-2 year view. PSEB is a license in question where it's proactively done to address a potentially new market opportunity given the way payments are going global. So that's been one angle. But coming, Amarjit, if I can come to you, one very quick thought to all the points being made. Look, banking as an industry has had, whatever, 30, 40, 50, 60 players, let's say, with some degree of market shares, the way it plays out. Payments, fintech, etc., have numbers much larger, and it's anybody's guess whether it's hundreds or in thousands. What do you think it does to the competitive dynamics for businesses general, for payments? And what do you think it'll force players to do? Will it force them to kind of get into adjacent areas, lending? What does it get people to do?
So, as I said, Vasu, to us, what we feel that the market is too large. A player like us that, kind of plays length and breadth of the country, you haven't solved for many of those use cases right now. So having large players, one could think of saying, should this, industry kind of consolidate? Or at the same time, should it figure out more use cases or niche plays? And I think there is enough and more room for that. Clearly as a bank, we keep thinking of how one could solve and make things easy. At the same time, being a custodian of, the security, safety and all of that, right? So to me, I think with ensuring that payments become available, digital payments become available in every hand, I think there's a long way to go. Cross-border, Vikas mentioned that. There's a huge play in cross-border as well. Many of these players are, working towards that. To us, when truly we'll take it to the last possible home, is where it is answered. To me, I don't know whether I've answered your question well, but I'm trying to tell you that I think it's not about having large number of players with 10,000, 11,000 players today, but it's about featuring out how do we bring all those use cases out and ensure that we're able to answer them all. Eventually, will there be some large players in? Answer is yes. That's how we've seen it evolve. But at the same time, there's a large play available, as of now.
So against that background, if I can ask you a question, which is, what would your expectations be from industry participants? Also, I said that the angle, the entity structures are different. Just as a larger context to the audience, typically in financial services, the licenses, whether in insurance, mutual fund, banks, you had to have a certain size, scale, net worth, and therefore a certain degree of skin in the game, and therefore got regulated a certain way. The emerging nascent plays of payment and fintech create for different size kind of organizations. So, and many of them are present in the audience. So, any thoughts on what your expectation of industry and participants is in terms of how they participate and play in the sector?
The principle that you're saying that, the skin in the game. So we have, the principles remains the same. That is why there is some amount of capital requirement is there. It's not as if that entire capital is required for, investing in the business, that the business will take that kind of capital. But it's like you need to have certain size just to filter out, that you get only the serious players who have something to invest in that. But having said that, I think last time also I had made this point that the compliance culture, that is something that we, look for, and the compliance really covers everything, the compliance is something that will, help you scale. The smaller entities may find it cumbersome, they may find it a little expensive to do and a nuisance, but without the compliance culture, without the governance in place, and both in letter and spirit when I'm talking about compliance, you really can't scale up. So that is what we really, that, the governance and the compliance and sound risk management practices. And beyond that, it is for the entities to really innovate and come up with the product differentiation and then, grow the digital payment size.
So quick question, not addressed to anybody specific, but to the point that you made, given the audience also has lots of younger payment companies to fintech companies, all of your mature players in some sense, larger entities. Anyone with any who wants to offer a guidance to any of the players? Any quick thought? After that, I have just one final last question of the regulator at that point. But any quick thoughts and any guidance anybody wants to, based on your experience of having built these businesses?
See, I think in fintech industry or business, which is very different from a lot of other industry and businesses, are that we're dealing with money. And dealing with people's money come with a lot of responsibility. And there is always, there's a lot of exuberance to say, let's build the best products and services, and that once we scale, we will think about, the governance, security, and the likes, right? But if it is not built as a DNA, when you're building products that you are not thinking about compliance and governance, framework and data security at the time of product design, I think you missed the boat. I think at some point in the future, things will catch up, and then that will really disrupt the business model. So at least my only advice would be that as you're designing, like in product design, we always look at customer requirements and then we design. Please also look at compliance requirements as part of your product design, because that will really help you to build what I call durable and long-term business. And even within that framework, I think today the technologies that we have, and also where we are moving to the world of generative AI and AI, there's a lot of these things can also be partially automated, and those things can really also help us to lower the costs in the long run. So that would be my only advice to you as we think about building fintech businesses.
Thanks, Vikas. Diksha, you wanted to quickly add 10 seconds, and then
yes.
I'm going to go back to Gunveer sir for a 30-second.
One small thing which is out of experience that, like Sir mentioned, we have a regulator that is very consultative, very accessible. And I think one of the learnings that we've had is that when in doubt, just ask. And that really helps get the guidance, helps us, think through both innovation and compliance together.
So now that with that, you can expect a lot more calls to come your way. Any quick sneak peek you can give us into the future from what we can expect from the regulator? Anything that the payments or the fintech industry should expect? Anything?
Something that is not there in the public knowledge already?
A sneak peek. I mean.
Most of the things are in public knowledge in terms of, the draft regulations, guidelines are already there, and, the feedback will be received and they'll be finalized and things. What is not there, what I can add is we are looking at creating an SRO for the, payments industry, the regulated players. And we are also looking at, as I indicated, at looking at some changes in the law that will, kind of make it more.
Well, I hope that makes it worth your while to have been here. Thank you all for a very wonderful audience. I guess our time's up. So back to you.
Thank you, Vasu, for a wonderful moderating the session.